Here's a quick recap of today's price action. So coming into the day, I had a very neutral bias. We were in between a 4-hour bearish and bullish for value gap and still delivering a daily bullish for value gap as well. As you can see, we have equal lows below and equal highs above, and we have unmitigated PDAs below, as well as resting sell side. So from here, all I was really looking for was for bearishness or bullishness to get disrespected to confirm my bias. Now, right at market open, we immediately manipulate minor sell side liquidity, tapping into a 1-hour bullish for value gap. From here, you can see that we start to displace higher here, where we then tap into a 15-minute bearish gap. From here, you can see that we are offered with a 1-minute short setup right here. The reason why I faded this is because although ES was very close to major sell side liquidity, if we take a look on ES at the same exact time, you can see that ES does not tap into any PDA to be used to take us lower. Therefore, ES has zero reason to distribute towards sell side liquidity, but rather has much more reason to manipulate your stop loss. Now, moving on, after this setup ends up failing, you can see that we remanipulate where ES now taps a 5-minute bearish for value gap. We are still holding a 15-minute bearish for value gap on NQ, and then we get a 5-minute inversion. Once again, the reason why I faded this setup is because if we take a look on ES, you can see that although ES had tapped a 5-minute bearish gap, we had a 15-minute unmitigated fair value gap at our stop loss. This was the point where you are taking a short setup on NQ. You can see that once again, ES has a reason to manipulate your stop loss. Also, this 5-minute bearish gap is an unsponsored gap, therefore it is not probable for continuation shorts. Also, although we've created these high time frame relative equal lows at this sell side on ES, the thing is, what this really is on NQ is it's really just disguised as high resistance, given that we've swept sell side liquidity inside of a high time frame bullish PDA in discount of the range, where we are now starting to displace higher, and you can see that we create a massive rejection wick. Therefore, at a specific point in time, I honestly just stopped trying to look for shorts, and I really just accepted that we are range bound in between opposing high resistance liquidity. And then from here, you can see that we end up disrespecting this 15-minute bearish gap. From here, I think that the DOL became very clear to these London highs. Therefore, I was open to looking for a continuation long. But as you can see, we never end up getting one. Therefore, I did not take any trades today. So pretty much exactly what you expect during New York AM session pre-FOMC. Unfortunately, we were just also in between high resistance liquidity with no true narrative. Therefore, staying flat was honestly the best decision, in my opinion, for the day. So I hope you guys learned something from the video, and drop a comment below and let me know how your trading day was.